ICP has fallen by 18.44%, invalidating that idea of surging up towards $14.65 and $15.42. In today's video, we are going to be jumping down into the technical analysis on Internet Computer, sharing my thoughts and opinions and my short to medium term price prediction on ICP. Guys, let's roll the intro and get right down into it. Hi guys, welcome back to the channel. My name is Nick and today we are discussing the technical analysis on ICP. As I get into today's video, guys, smash that like button. Let's see if we can hit 500 likes on today's video. We do appreciate that. If you are new to the channel, why not subscribe and stay up to date with all the content that we do here at Cheeky Crypto. Guys, this is the daily chart. This is ICP paired up with USDT and we are using Binance as our data source. You can see that we did have this downward trend. We did have a bit of a breakout from it. Unfortunately, we're not able to go into higher highs or have a breakout from that point of view. This is one of the reasons that trend lines are really quite bad tools for analysis, because you can see here that we had the break of our trend line, but still it hasn't broken out of its actual bearish trend. So the trend line was drawn incorrectly. One of the big issues with trend lines overall is that it is down to the analyst who draws it. And in this particular case here, we did have a trend line drawn, but it clearly wasn't the correct one. You can see that we do have resistance on the 50 SMA, 50 EMA. These are pretty major resistances alongside the 200-day EMA. Now, the 200-day EMA, the white line coming through here, which is currently sat at $11.65.2, is unfortunately now broken, right? So the 200-day EMA is your trend filter, as I say this all the time on the channel. Anything above it, you should be bullish, and anything lower than it, you're going to be bearish, right? So you can see here that when we started to really lose the 200 EMA back in February of 2023, April of 2023, May of 2023, it led us down into the $2.80 range, right? We then obviously broke up, retested, found support on that 200 EMA and went up into this great run to the upside. Now we've closed back lower than our 200 EMA here on the 7th of June, and as a result, we are now tracking these moves to the downside on the daily time frame, aligned to what we were talking about previously with our previous swing high here on the 21st of April, holding true, as in we haven't broken anything higher than that. That is going to be our B wave move, and we're still targeting out the $9.14.1 to $9.99.8, in line with the previous technical analysis I put out about 5 or so days ago. Okay, so for the most part, we're still tracking beautifully for those corrections to the downside. Also, the potential for $7 to $8.30 remains there as well. So expect a little bit more volatility on ICP, but this could be a fantastic opportunity to scoop up a bigger position before the next big bullish run to the upside, because the nature of our correction here isn't a trend. We're not looking at this through a trend-like lens. We're looking at this through a very corrective pattern, basically meaning that it's short-term, meaning the short-term price prediction is for a slippage to the downside. And don't get me wrong, there might be some smaller time frames like the 1 hour, the 4 hour time frame that might move up a little bit before we slip further down. But ultimately, on a daily, weekly time frame perspective, something that's going to take weeks to months to play out, we're looking for a little bit of a move to the downside here to finish off our bearish pattern. Once done, then we're going to be looking for significant rallies and runs to the upside. Our momentum indicator is back down in the oversold area. As you can see, oversold on the weekly, daily, 8 hour and 1 hour timeframes. However, we can, of course, still see some more volatility on ICP. If we turn off the stochastic RSI and throw on the relative strength index alongside the divergence, we can see hidden bearish divergence and bullish divergence. The last bullish divergence that we saw on the RSI versus price action was on the 31st of May. If we bring our price action up, you can see that we did have a little bit of a run to the 50 EMA, 50 SMA resistances. We haven't obviously broken through those, we've broken down instead, and the RSI is still just above the oversold area, indicating we still have more slippage to the downside on the relative strength index. Ultimately, though, I am looking at ICP through that idea that we are going to be seeing some pretty decent prices. I was saying, I think just a few videos ago, for ICP, anything lower than $10 seems like pretty decent value, where you want to be kind of dollar cost averaging and building out those positions. But do bear in mind, I am no financial advisor. I cannot give you financial advice. All I can do is share my thoughts and opinions in the data, in the charts, as I personally see it. If you do have access to a financial advisor, you should probably talk to those guys, as they'll know your financial situation much better than I ever would. And so, in my opinion, lower than $10 seems to be the place to be thinking about dollar cost averaging. It's where there's a huge amount of buying pressure, which we can also see within the range of $9.52 to $10.91. So we can argue right now, at the point of recording today's video, at $10.72, this is a pretty decent area for great value, potentially for significant runs to the upside in the future. Now, if we go ahead and throw smart money concepts on here, we can see that we're right inside the discounted range, indicating to everybody really that this is a great place for dollar cost averaging. We do have currently a strong low, but I suspect that's not likely to hold, and we might start shifting a little bit further to the downside. There are some fair value gaps down here, but I don't think we're likely to fill those out unless we really do get a bearish move towards that $7 to $8 range. But for now, I'm not going to be expecting that. We are still technically in a bullish run to the upside on a macro time frame. So we're not terribly too concerned over this small amount of volatility that we've seen so far. I know a lot of new people in the space who are unexpecting these kind of bearish movements maybe are caught off guard with a 49.49% move to the downside. However, we have to bear in mind we cannot move up the way that we have done without a significant cooling off before the next surge upwards. Prices don't always just track upwards forever. There has to be a correction, there has to see profits getting taken, and you have to see the market resetting. And that is the process of what we're going through right now when it comes to ICP. Appreciate the process and have some patience, and I think it will pay dividends in the longer term. Now, if we roll this up into a weekly time frame, we'll be able to take a look at where we are currently tracking. The idea of moving down towards the kind of 50 simple moving average is something that we need to be aware of. That's the $7 to $8 range. But we can also find here on the weekly time frame that we're finding support on the 50 exponential moving average on the weekly. This is where we're currently finding our support, currently sat at $10.52.3. We might find with a weekly wick a little bit lower. As I said, that targeted range that we're tracking, that $9.14 to $9.99, or potentially down to that $7 to $8 range, potentially if we do lose the 50 EMA on the weekly time frame. Ultimately, though, if we do move down more towards the $7, i.e. we have that bearish play, then that's going to limit your growth. The growth for ICP would then be limited to between $53 and $85, which I think would be phenomenal considering the potential here of buying it just sub of $3. So there was some great potential moves to the upside, well over the 10x position. Now, obviously, ICP, a lot of people do think and believe that maybe there's the chance for a new all-time high. I'm very skeptical of that. I don't think we're likely to see that play out, just simply because of everything that happened during that launch. It was a perfect launch. It launched on all centralized exchanges at the same time. We saw great growth and then an absolute crash, which wrecked hundreds of thousands of people. It's important to understand that it's very unlikely that we're going to see a new all-time high, as selling pressure is going to be very intense the higher that the price goes, specifically when people were able to take advantage of some really decent prices at those lower levels of $3, $4, $5. So as we can kind of see here, we've got the potential here for a $53 to $85 on the idea that we move down to $7 in the lows. If we kind of hold the current area around that $10 level, $9.99 as an example, then we potentially could see this thing somewhere more between the $74 and $119. But again, it's up to seeing how deep this correction goes as to whether or not we're going to see those kind of levels come through for ICP. Now, ultimately, I'm a believer that we're going to see some pretty decent returns on investment if you're dollar cost averaging during the bear market and not just coming into the crypto space right now. If you're coming into the space right now, you're going to find it very difficult to see a 10x, in my opinion, on something like ICP. But there are many other altcoins out there that have some significant potential, whether they are 50 or 100x. Do join us in our free Discord linked below if you are interested in understanding a little bit more about the altcoin market and those hidden gems that we talk about in our Discord server. Now, guys, I'm going to wrap this video up there, but if you have found it useful, smash that like button. If you're new, subscribe. And why don't you check out this video right here where we're discussing what's going on with Cardano's ADA.